Hello and welcome back to MarketWise, everybody. And today we're gonna explain about the most important thing in the market, which is liquidity. So, as we all know, there's always a liquidity in the market, which helps the market to flow. If there is no liquidity in the market is never going to flow. So, there are two types of liquidities: internal liquidity and external liquidity. Now, what is external liquidity? The higher time frame liquidity is known as external liquidity. Like if you trade 4 hour, let me just quickly go. If you trade 4H, then you trade 1H, and then you go toward the 15M, and then you go toward the 1 minute. Now let's say you see your bias on 4 hour and you move for the confirmation toward the 1 hour, and you identified your zone on 15 minute, and then you entered on 1 minute. Now these three time frames will be your external liquidity. All right, and your internal liquidity will be formed on 1 minute. Now let's move towards some forex charts, and I'm just going to explain to you guys. So this is the liquidity in the market, which is this inefficiency. All right, now as we all know what happens whenever market come into the FVG, it taps and it move toward the real direction. After grabbing the liquidity of FVG, market move toward the real direction. So let's move now 1H toward the 1H, and if you see, we got this high time frame 4 hour order block, and we came all the way down. We swept the liquidity of this order block, and then this is the 1 hour FVG, and which is exactly tap the constant encroachment of the FVG. All right, so we tap the constant encroachment of 1 minute FVG. Now this is your external liquidity. Now what is your internal liquidity? That you're gonna move toward the 1 minute, and let me show you guys. Now this is your internal liquidity. You got the clear reaction. This is your high. All right, market swept the high. This is your internal liquidity, internal buy side. Market swept that. Market simply moved toward the sell side, and now you don't know where is market going. So what do? You wait for the internal structure. This is your internal liquidity. All right, this area. And as you guys can see, we came all the way back here. We tab, we again give reaction. We came back, we again gave reaction. Now internal liquidity is your turtle soup. It can be your turtle soup, it can be your inversions. All right, it can be your, let's say, order blocks. These all things hold liquidity in it. These all things hold liquidity in it. Now let's break down my today's trade, which will give you the proper example of the internal liquidity. So now this is the trade that we did today, and then we also recorded the live execution that will be posted on my YouTube as well. You can see there. So we got the 15-minute buy side liquidity. All right, we got the 15-minute buy side liquidity, 15-minute sell side liquidity, which is taken out by the market over here. All right, and before that liquidity, now this is the external liquidity. Let me clear that. This is external liquidity. All right, and now this one, this liquidity is the internal liquidity that we swept. All right, as soon as we swept the internal liquidity of 15-minute, now I will show that we're gonna move towards some inefficiency, and yeah, here we got the inefficiency. All right, then I moved toward the 1 minute for the more confirmations, and what I saw is here. So we open up at 9:30. We were accumulating before that. We manipulated. We again created a manipulation move toward this sell side liquidity to clear this internal sell side. We clear that internal sell side. We form an order block over here, and then we simply move toward the buy target. All right, This is the execution. That's how you identify your internal and external liquidity. We also, again, now here we got the external liquidity. As I mentioned, this is our external liquidity. You can see that we swept the external liquidity, and then we again form a reaction toward the buy side. All right. So this is the external liquidity, and this is the internal liquidity. The higher time frame liquidity, which is formed on 4 hour to identify your bias and trends, that will be known as the external liquidity, and whereas the turtle sweeps and the liquidity sweeps in a smaller time frame will be known as your internal liquidity. So I hope you guys like it. I'm gonna meet you in the next one.